Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant applies consistent, high-probability trading systems for the financial markets. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his roadmap to high-probability financial control. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Hey everybody, this is Grant. Thanks for joining. So I was thinking today, what is it that I could share with you that would be valuable? And as I started to look over some of my tips and techniques, I realized one thing I've not shared with this community is a tip that has helped me to find high probability stock opportunities. You interested? Yeah. So what I wanted to do is I wanted to take a moment to talk about ways to reduce the set of opportunities or stocks to look at to give you those opportunities that are higher probability. So now here it is. Okay, pretty straightforward. All right, here's the tip or the technique. Now, regardless of what trading platform you use, whether it's Thinkorswim or NinjaTrader or whatever it is. In fact, you don't even need to use that. You can even use some of the other web-based tools as well. But the bottom line is when you typically are looking for a particular game, right? Like let's say you wanted to find geese, or you wanted to find ducks, or you wanted to find elk, you typically go to the areas where they're going to be, right? So I grew up doing a lot of things in the mountains with elk, and I did a lot of things with ducks and geese. Of course, you go down to the waterfowl areas. So how is it the stocks could be much different? So here's basically what happens. If you take a market and you divide it into a set of related stocks, you ultimately arrive at something called an index, right? And the index is a collection of the stocks that have affinity with each other. Now, there are a lot of indexes, but there's a group of indexes that I found very valuable that helps me to reduce very quickly to the set that I'm interested in looking for. See, like you, I don't have a lot of time. And so I need to be able to find something quickly that will let me identify where the high probability situation or opportunity resides. All right, so what does this look like? Well, I use the Dow Jones US Indexes, and there's quite a few of them, but it's in fact, there's so many that you typically can't even walk through all of them. It's not that you can't, it's just that you don't want to. At least I don't want to, right? What is there? Maybe there's 50 of them, maybe there's more. There's quite a few of them. So I typically use a trading platform that will allow me to see these indexes and see the characteristics of each index. So how does this work? Well, let's say that you've got an index and it's got a collection of stocks that are in it. It could be energy stocks, or it could be insurance, or financial services, or entertainment, or broadcasting, or whatever it is. So there's a collection of stocks that together behave in a manner that produces what's called an index chart. And so one of the key things that will save you a lot of time that I use constantly, and this has saved me a ton of time looking for opportunities, and this is something that I work with the trading community that I work with, is I take those indexes that are showing the most aggressive moves. Now, of course, not all stocks within any given index are lined up directly with the index. But here's what you do. You take the index, and then you find its high probability direction, and then what you look for is those stocks that are in there that are aligned with the index. There's your opportunity. So let's give it a try. All right, what's today? Today is May 17th, 2018. Let's give it a shot. So I happen to be in the Thinkorswim platform, and I have my Dow Jones US Indexes up, and I'm sorting it based on the net change of the indexes. And what scrolls to the top that's very bullish, and of course I look for both directions. I look for those indexes that are going bullish, those that are going bearish. So in this particular case, I'm looking for the bullish. So I take that, I look for the bullish, and what bubbles up to the top is the Dow Jones Exploration and Production Index. So what's in here? if I look at the stocks, in fact, you can even find these on investing.com. If you look for DJUSOS, okay, so just go to Google, type in DJUSOS, and then when you find the hit on the result list from Google, open up the one on investing.com, go down inside of there, and you will see that not only the chart for it, but you'll then see the stocks for that. Now, long before I get to the individual stocks, though, the approach that I take is when I identify an index that's moving a lot, I look at its chart. Now, there are several key things that you look at when you're trying to identify a well-formed, well-structured index chart. Now, I won't have time to go through all of that now, but one of the things that you do is you look at its structure. So what's structure? What's the structure of an index? I'm not even talking about the individual stock. You're going to look at those channels and those resistance and those support channels and lanes and how that index is moving. So let's say that you have a set of moving averages. Let's say that you have the index is well above those moving averages, and it's moving in a bullish action right up through a nicely formed channel. You've got an index that is very bullish, all right? So when I look at DJUSOS, that's what I see. And in fact, I see, what is this? I see about, a week ago or so, yeah, maybe 2 weeks, somewhere around the 8th or 9th of May, this index shot outside of the top of its channel, incredibly bullish. Now, you're also going to want to look for things like momentum. So you're going to want to look at things like the MACD, right? How much momentum and pressure is pushing on this index. Once you've identified the index, then in this particular case, I'm looking at investing.com. It tells me Chesapeake Energy, Marathon Oil, Range Resources, Parsley Energy, on and on and on. All right, these are some very active stocks that are exhibiting what appears to be the same behavior. Let's go look at one of those. So I'm in my trading platform. I'm going to go take a look at CHK. This is the Chesapeake Energy one. And what comes up is then the structure. Now, as you look at this particular stock on Chesapeake, you'll see that it's been going down, bearish for quite a long time. Up until the last few weeks, it has popped out of a downward moving channel, incredibly bullish opportunity. The MACD is shooting up. There's even options on this one if you're an options player. All right, so just to recap, if you want to reduce the time that it takes to look for a good stock opportunity, one tip that I use that helps me get to the net real quickly as I look for the rate of change on the indexes first. I look at the market structure on those. I look at the moving averages and where the resistance lines are on the overall index. And then I go after the actual individual stocks within that index. I look for their structure and then for tradable opportunities from there. Okay. Well, I hope that helps you. It certainly helps me and saves a lot of time. Hey, look forward to talking with you again. Until next time, use your indexes.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free roadmap to high probability financial control before you make an investment decision. Visit financialinvestingradio.com now.